You invest in stocks and you want to know where the stock price is going? Well, at least have an idea or forecast? Well, listen up. EPSMomentum is using the post-earning announcement drift. Alright, the post-earning announcement drift. This is it. Only at EPSmomentum.com. Truly unique analytics that helps you forecast stock prices. Right. So you would say, how do you do that? You know, do you have a crystal ball or anything like that? No. What we face every single quarter when a stock publish their earnings, the day of publication, the day of the earning calls from the CEO, is that investors react in one or two ways. They're either very positive or they're either very negative. They're negative or positive. It could be neutral, but you know, most of the time they either buy the stock or don't buy or sell, or you know, one or the other. Now, as a human, we have biases and problems and issues and errors, and we sometimes overreact or underreact. All right, so let me give you an example. You think that this stock is great. You say, oh, good earnings, let me buy some shares. So you buy 100 shares. And it turns out that the stock is really amazing. And as the quarter unfolds, you know, you think more about it, and there's more research in this, and you say, oh my God, I should have bought more stocks. So you underreacted on the positive side, right? So it turns out that there's now 4 cases. You either have a positive underreaction, which is drift A, positive overreaction, or negative overreaction, or negative underreaction, right? So you got 4 cases. And when you pull up a stock with EPSMomentum, you have the ability to see and visually see in which drift you are on, which is drift A here. And you can see the accuracy of that drift. So 63% of the time we were right, meaning the stock ended up in that range, taking into account 15 out of the last 36 quarters, right? And overall, on NVIDIA, we predict the stock price correctly 72% of the time. That's the accuracy you have here, taking all drifts into account. In drift C, we're 100% of the time accurate, right? So just taking a step back on the methodology, I just want to show you, you must have seen the video from the first page, but let me just play it again for you and describing what it is. So what we look at is we take historical quarters and then we draw a cone of possibility of where the stock price would go. We take all the quarters, 1, 2, 3, 4, 5, going back in history. We take all of them, we stack them up, and we bucket them into drift A, B, C, or D. Okay? How do we bucket them like that? Well, we bucket them on the percent change of the first day, overnight change from the evening to the morning, and the during the day change. If they're both positive, you're in drift A. So this is what you're seeing here from 4 p.m. all the way to 9 a.m. So the first after-hour trading, you know, that jump is positive. And if the first candle is positive as well, then you have a double positive, you're in drift A. This is where the quarter is going here. From there, we take all of the drift A's and we draw averages and mean and maxes, and then we arrive at a cone of where the stock price could possibly be, right? And this is what we have here as a result. And you can see the statistics. Out of 36 quarters, 15 of them were drift A, 6 of them were drift B, 8 of them were drift D, and 6 of them were drift C. You see this number, the overnight number, which is on that day, this day in the evening, all the way to during the day here, is positive jump overnight, and positive during the day. So it's in drift A. And drift A, we've been right 63% of the time. And you can have a look at it in history, right? So in history, this is the current drift, but you can go to drift before, which is drift D. Look at that. It went out of the cone and then right back in. We were correct. The previous one, it went out, in, out, and right in. this one is a little bit of a abnormal point. Maybe it's a mistake. Drift C, it went right in. Okay, again. Drift A again in 2020. And it was right in. So right in the middle almost, right? And you can go back in history and see all of the drift, how they were in or out, and so on. Okay? So that is really powerful because, you know, not only you were right back in those days, but, you know, there's a high probability that you could be right this time as well. Obviously, anything can happen, right? This is stock market, so, you know, this is just a statistical probability, but still very useful to know roughly where the price could potentially end up based on statistic and behavioral finance, right? If you want to look at further data on the drift, you can click on the last icon here. You can also click on relative to S&P. Some people say, well, it's because the S&P went up or down, so we can adjust the number for beta for the S&P. But overall, that gives you you know, a pretty powerful picture of where one stock could go. So here it's basically telling you that NVIDIA, which is at 226, will go to 242 on average, max 230, 327 or 190, right? So this is great, and actually it tells you that all the drift A on average goes up. They go up 27%, pretty high, right? The drift B go up only 1%, drift D is 5%, and drift C 3%. So if we pull up another stock, let's say Micron Technology, in the same sector. So here we have a drift D actually. It usually goes up 13%. It's right in there. We are accurate 66% of the time. Drift A, we're accurate none of the time. So that's interesting. There's also, we get it wrong also sometimes. But on average, taking into account all drift, we're right 61% of the time here. So yeah, drift D, it's, you know, stock's going to end up there. So sometimes it's a wide range. Sometimes it's a narrow range. It really depends. But it really helps you, you know, it really helps you give you an idea where the stock could end up, right? So here when drift D with 25% accuracy, it's not that great, right? But it shows you that there's 8 out of 38, so a good set of quarters, right? But drift A, we're 62% accurate and 66 there. So again, it gives you where the stock could be, so you can create, you know, an option position, put spread or else, and you know, that could be very, very useful for you or for your next strategy. Now your next question is, okay, well, give me all the stocks that have the best drift, right? So very simple. You go in the screener, you go to PEAD, and then you have the ability to look at all of the drift A or drift B, and maybe use that field as well. This is the distance to the end of the drift on the mean, and then you have the minimum and the max, but that's the mean. So what is it exactly? It's the distance between the current stock price here, 183, and 191. So it tells you if there's some upside or not. Okay, so that's powerful, because what I can do is I can say, give me some positive upside. So now I'm right there with only the stocks that have, you know, very, very positive upside. Obviously there's some crazy numbers sometimes on small caps, but actually, why don't we filter for bigger cap, right? Like 2 billion or so. Okay, so if we go to Yalla, for example, right? So see how Yalla, well, so here this is a little special. We don't have enough history on Yalla to predict anything, right? We only have 4 quarters. So I would just ignore the drift because it's irrelevant. Up until we have 1 or 2 years of data, you know, the system needs to learn from actual historical data. But we can go, I don't know, what about LFST? No, still fairly new. Trip.com. Okay, so here that's interesting. That's a drift C. Believe it or not, the performance pretty nice. It's 8% on every drift C. It looks like it's been out of its drift C for quite a while, right? But we're accurate 87% of the time. So what I'm seeing here is that there's a likelihood that stock price will retrace back in. Okay, so that is really interesting. And you know, you can see in history all of the drift C. So we got drift C here, right, spot on. Actually, this one actually finished spot on. This one spot on, you know, not too far as well. This one right there as well. So let's see how it finishes, but you know, it looks like it might end up in the drift as well. All right, so this is very powerful, but obviously I can filter more, and I can say, give me all the drift, with the current drift that have at least an accuracy of, I don't know, 65%. Usually when you have above 60%, you have a pretty big advantage compared to others, right? So what does it do here? Well, let's have a look. CRISPR therapeutics, and we can look at the size of the sample as well. There you go. So we want, let's say we want a decent sample, you know, at least 8 quarters, right? So here you have 12 quarters on each one. So let's have a look at this one. So this one is accurate 100% of the time, 11 out of 37. The quarter is usually flat, but this is down because we selected some upside, so we have some upside here. So in short, it's usually a stock that get beaten down every time it's a drift D, get beaten down nicely, but then it retraces back up all the way to its previous level, right? And this is what we see here, beaten down and retrace back, right? So this is very useful. See again, beaten down here, beaten down here. You see many quarters beaten down. So there's repetition in the behavior of investors, right? And this helps you capture it and draws where the stock is possibly going. So again, super useful. There's many other stuff that you can do there. You can do the have a look at the forecast and the actual move. So the forecast and the actual move is it's a new metric that we just created. So the forecast is actually the price move from the beginning of the quarter until the end. So we only know what drift it is after day one, after the end of the day after earnings, right? After day one. And so if it's drift A, and usually if all the drift A go up 27%, well then it's 27%. That will be the forecast, right? And then you see where the stock has actually moved from day one, okay? So it went down, went up, went down. So sometimes you get big discrepancies, sometimes you don't. So, you know, as you get more sample, you see you have some 9s here, but as you get 10 or 11, it gets more precise. See where we forecast is 4%, it went up 3. So here 2, -5, 6, 2, 5, 10, 14, and so on. So it's not always right, obviously, because it's really hard forecasting stock precisely. But at least that's the mean. So 3, 1, 8, 9, 4, 1, 4, 10, 2, 1. So, you know, it gives you an idea of where the stock is potentially going. And this is the number you find here, 10.75 from the beginning. Actually, 10.75 is the distance from here to here usually, but the forecast is the distance from here to the end, right, after day one. All right, so all this is very useful, helps you in your stock strategy, option strategy, and truly unique and only at EPSMomentum. So sign up, you know, give it a try, and let me know if you have questions. Thank you.